Well, want to talk a little bit about small business here. And, when we say small business, it might be a little bit below the size of what you guys typically lend to. But you previously said that the risk for distress for small businesses is being underestimated. We also saw a real dichotomy exist between larger borrowers that were able to go to the public markets and get credit very easily, and those that didn't have as clear of a path. So can you talk a little bit about your outlook for small business and how private credit has played a role to lending to some of those borrowers?
Yeah, it's a good question. I do continue to believe that what we're seeing in the liquid markets is fundamentally disconnected from what's happening in the real economy. Now, the good news is, as we move towards recovery on the health front and the economic front, with an administration and a central bank that are determined to drive growth, we are seeing improving conditions for small business. But let's not forget that there are still big sectors of this economy that are challenged, either in terms of persistent unemployment or access to capital to turn the business back on and build working capital. So I would say the outlook for small business is probably better than I would have predicted, as recently as 6 months ago, but we're not quite out of the woods yet. I think there's an argument to be made that some of the challenges there have just been delayed because of the stimulus and the amount of liquidity that's come into the market. We're not necessarily seeing that in our portfolio. To your comment, average EBITDA in our corporate lending books is upwards of $100 million of EBITDA. So our borrowers have many more, sources of liquidity, whether that's private credit, private equity, tapping the liquid markets as well. So I think it's a TBD on small business, but for the time being, it's actually healthier than I think I would have expected.